Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a supply and demand zone rejection. So on crude oil here, we just came up into a zone that we were looking for where previously a lot of supply had come in and the sellers had defended it, which actually triggered a ways back, all the way back here at 8 o'clock this morning. And that initial rejection down here shot the market down from those highs of the high of day up here all the way down, 39, even further ticks. And now we've come back and retested it to the exact tick. So now what I'm looking to do is essentially just take a reversal pattern once we can get up into our last chance zone where we can look to then again take this right back down again. Now we did have the cross down. It's not a hugely important part of this, but it's nice to see. The big part that I'm really impressed by and what I'm looking for is this exact test. What I want to see is price to come up, look as though it's going to go higher to trap some buyers in, to then immediately flip right back down again and sell off to more of a rejection type pattern. Now the only reason we're looking for this is because normally this would be a nice buy setup. We've got a nice, we've got nice waving to the upside. Everything is looking long except we've got this big blaring sell zone in front of us. So what we're looking to do is just sell that price right back down again, and looking to honestly get a move all the way back down to the area of demand down here starting at 101.94. If we can get that pushed down, we'll be looking at sitting on a pretty solid trade, another 30-40 tick rejection. So right now we're coming in close to the zone. We really need to test this area in here before we can look for the rejection right back down again. So just waiting for price to get up into that zone and give it a good test before we can start looking short. And once we get up into that area, then we can start placing our orders. Now getting into this trade is going to be a 6-tick stop and an 18-tick target to the downside. Preferably though, we'll probably bump that 18-tick target down to that 101.94, maybe a little bit ahead of some of these the levels that might be in our way here. So looking from, we'll just say an entry of right around 102.25, looking for a downside target of probably around 96, about 29 ticks or so. All right, so we just tested that area, so I'm going to place my sell stop limit ahead of time here. And what we want to do now is just get our order in place. Now that we've tested, I'm looking to sell short at 102.23. If we go a little bit higher, I will consider just bumping this up. But if we do break above or even test this 32 level again, I'm going to be losing interest pretty quick here. So as long as we don't break above this 102.32 area, we should be good to go. Bump my order up to 102.24 now, looking for a downside trade here. Looking for, again, a fill at 102.24 and getting a stop at 6 ticks, and the final target probably down here just ahead of this at 101.96 for about 29 ticks. So let's see here, just waiting for our fill. So just waiting on that fill short at 102.24. Let's see if we can get price to get us in here. Starting to get that rejection that we're looking for. Again, the big part that I'm really liking about this trade is this exact rejection. When you have an exact rejection of a zone like that, that's a really strong indication that we're going to start seeing some sellers come in rather than buyers. So we are filled here, 102.24 short, 4 contracts. I'm going to bump my target down from our original 18 ticks to 101.96 all the way down here. 1 tick ahead of these weekly levels in the buy zone down here. I'm expecting a really strong rejection, especially after an exact test here. Once we get 10 ticks or so in our favor, we'll move the stop to break even just to lock out the risk, but we will be looking for an overall downside. Now what we may consider doing is taking some of our profit off ahead of time, just to get a couple contracts off with profit, but overall this move down definitely has an area of interest for us to be selling short here. So what we'll do is, since we're in short, I'm anticipating this is going to take a little while before we start getting down in that area. So what we'll do is we'll come back in a little bit here once we get some better price action, and then we'll see how the trade turns out. All right, guys, we're back. We're coming into our final target here at 101.96 now, getting really close. We are going to lock in our profits a little bit and keep trailing on the way down. So we've got 102.09 locked in now for our stop, and 3-1, there we go. So we got all of our contracts filled now down here at 101.96. So really strong trade. So from our entry up here at 102.24 down to our overall target here at 101.96, got 28 ticks. And using our handy dandy calculator tool, 28 ticks on 4 contracts, we're looking at a gorgeous number of $1,120 in profit on, let's see, from our entry at 10:02 a.m. down to our final target here at 10:12. So just over 10 minutes or so to a downside trade. So a really, really strong trade. And now we're lining up in the exact same area. We're coming down into a buy zone, and we might be able to pull off another trade to the upside right back up into the range again. On sideways days, you can see trades like this that fire off all the time. So potentially looking for another reversal trade right off of 101.94 back up into the range. But that's going to be the trade for today. Really strong trade to the downside, and overall for 10 minutes of work, I'm not going to complain with over $1,000 in profit. So that's going to be the trade today. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schoolattrade.com. Have a good one. Bye.